We'll do another question from our May 2024 examination. This is question number 6B for 4 marks. This is from the chapter 11, unit 1, which is financial statements, but not required to prepare financial statements here. This is that part of the chapter we would have to compute our dividend based on the previous year's profits. That is, in the case of inadequacy of profits, dividend will be declared based on the declaration of dividend rules 2014. Do you remember the rules? We have discussed it as a part of our class, and we have done 3 questions: 22, 23, 24 from our class notes. Questions are completely based on this. In fact, those are slightly more complicated than this as well. Let me quickly tell you what are the rules that you should remember. The average rate of dividend cannot exceed the declared rate of dividend cannot exceed the average of the last 3 years. Second one, PUC plus free reserves into 1 by 10 is the maximum amount that we can utilize for the purpose of dividend. Number 3, and number 3 I'll tell later. I'll tell number 4. Number 4 is after we take the dividend from our reserves, remaining reserve should be minimum 15% of paid up capital. But to use this reserve and declare dividend, we'd have to first deduct current year loss if there is any. If there is current year profit, we will add to it. Current year profit, there is no restriction. Current year loss has to be deducted from that post 15% maintenance of reserve, whatever balance we take. From that, we deduct our current year loss and balance can be declared as dividend. This is what we need to check. Shall we? Now, following information is available in respect of Z Limited. Paid up capital. They've given only equity, nice and sweet and simple, 500 lakhs. General reserve. This is our only free reserve. They have not given P&L, 100 lakhs. And our favorite loss for the year ending 31st March 2024, 5 lakhs is given. In the third case, after we keep 15% of the reserve asset and take the balance, I'll first deduct 5 lakh and then I'll declare dividend. Then I'll check whether the balance is sufficient. Due to absence of profits during the year 23-24. This is the most important part. Here they are trying to tell that there is inadequate profits during the year. The management recommends to declare dividend of how much? 10%. So in every case, whenever we compute, we are checking if they can give 10% dividend. Now, last 5 years dividend rates are given. We don't care about last 5 years. We'll take only last 3 years. Last 3 years is not 10, 10, 7. It is 12, 14 and 10. 20, 21, 21, 22, 22, 23. So let me write year 2021, 21, 22, 22, 23. Dividend percentages are 10%, 14%, 12%. Together, 36 divided by 3. 12% is the average dividend rate. What is the dividend rate that they are proposing? Is it within the limit? Yes. The rule says in the event of inadequate profits, dividends can be distributed out of reserves subject to conditions given under Company Dividend Declaration Rules 2014. The rate of dividend not to exceed average of last 3 years. Average of last 3 years 12%. Dividend declared proposed 10%. It is within the limit. First condition fulfilled. There is no problem with the first condition. What is the next condition? Equity, that is PUC plus free reserve into 1 by 10th. If you do whatever number that we are at, that is the maximum amount that can be taken from the reserves for declaration of dividend. Now let us see how much is the paid up capital of the company. Paid up capital of the company is 500 lakh. Free reserves of the company is 100 lakhs. Let me take equity share capital 500 lakhs. Free reserves, that is general reserve, 100. Can I say PUC, that is paid up capital, plus FR, that is free reserves, is 600. If I am supposed to take 1/10 of PUC plus free reserves, that is 1/10 of 600, that is 60. Maximum I can use how much? 60. If I am using 60, what percentage of dividend am I declaring? 60 is dividend declared for paid up capital of 500. Please do 60 by 500. 12%. But the dividend proposed is how much? Is it within limit? Yes. Either you can do like this. That is using the 1/10 of the money into dividend percentage to check if it is less than 10. Alternatively, we can maximum use 60. How much money are we utilizing for dividend? 10%. 10% of 500 lakhs is how much? 50. Maximum how much money can I use? How much money am I using? Is it within the limit? Yes. Either you can convert the dividend percentage proposed of 10% to number, compare with this number, or convert this number to percentage and then compare. So compare either percentages or numbers. Ultimately give the conclusion correctly saying that As per this 1/10th requirement condition also, there is no problem. It is absolutely yes and green signal from our side. Shall we see the last case? Last condition is that after we take the money from the reserves, the remaining free reserves should be minimum 15% of paid up capital. And such 15% if we keep and then take balance money, no, 85%. That from that balance reserve, first we should adjust the previous current year loss. And after we adjust the current year loss, only the balance can be declared as dividend. Shall we see this? Now, how much is the free reserves that is there in the question? General reserve is there. How much is general reserve? 100 lakh. In this 100 lakh, after taking the money for the purpose, I'll write here in lakhs. After taking the money for the purpose of dividend, how much should be the reserve still maintained? 15% of paid up capital. Paid up capital is 500 lakhs. If I do 500 lakhs into 15%, I'll arrive at 75 has to be maintained even after declaration of dividend. So reserves that should be there is 75. Reserves that can be utilized is 25. Reserves that should be still there is 75. Reserves that can be utilized is, can I use full 25? No. First I should adjust current year loss. What is the loss for 2023-24? They have given loss for the year ending 31st March 2024 is 5 lakhs. I will deduct 5 lakhs from this. How much is the amount available for declaring dividend? Now, either convert this 20 to percentage and compare with the proposed dividend percentage of 10, or convert the 10% to number and then compare. I will show both methods. In the exam, whatever strikes up to your mind, you can use that. If the dividend availability is is from 20 rupees, for the equity capital of 500, rate of dividend is 20 by 500. 4%. But the dividend proposed is how much? 10%. Is it within the limit? No. Maximum declaration of dividend is 4%. If you remember our 21st question also is same answer, 4%. Next, what is the reserve utilized for dividend? Reserve utilized for dividend is 10% of 500. 50 will be utilized. But how much can they utilize? 20. Can they utilize 50? No. If they utilize 50, the balance of free reserves remaining after declaration of dividend will fall less than 15% of paid up capital, which is, let us say, lapse of condition. So it is not allowed. So we'll write one sweet conclusion saying that reserves utilized for the purpose of proposed dividend rate is not within the limits of funds available after 15% of PUC to be maintained. How much can we further declare? We'll write that also. Maximum dividend that can be declared is 4%. And for writing this, you will get 4 marks. Easy? Have you done a similar question? Will you be able to do similar question in the examination? Yes.